How to get approved for a DSCR loan even with no rental income. If you're trying to secure a real estate loan but don't have traditional rental income, you might think you're out of options. But what if I told you there's a way to get approved, even with no rental history? DSCR loans are one of the most powerful funding tools for real estate investors. And today, I'm breaking down exactly how to qualify, even if you're just starting out. By the end of this video, you'll know what DSCR loans are and how they work, the exact steps to get approved even without rental income, and common mistakes that get people denied and how to avoid them. And if you're looking for the best lenders to work with, I've got you covered. Just check the links in the description below for top DSCR loan providers and business credit resources to help you secure funding. Let's get started. Before we dive into how to get approved, let's talk about what a DSCR loan actually is. DSCR stands for Debt Service Coverage Ratio, which is a fancy way of saying, can the property pay for itself? Unlike traditional mortgages that focus on your personal income, DSCR loans focus on the property's ability to generate enough income to cover the loan payments. Here's how it works. Lenders look at the rental income potential of the property. They calculate a DSCR ratio by dividing the property's income by its debt obligations. If the ratio is 1.0 or higher, it means the property is self-sustaining and qualifies for the loan. Sounds simple, right? But what if you don't have tenants yet? Don't worry, I'll show you how to structure your deal so you still get approved. How to qualify without rental income. Now the big question, how do you get approved if you don't have rental income yet? Here's what lenders look for. Projected rental income. Even if your property is vacant, lenders will use market rental estimates from appraisers to calculate your DSCR. Strong credit score. The better your credit, the easier approval will be. Aim for 680 plus for the best terms. Larger down payment. If you can put down 20 to 25%, lenders will be more flexible, even without existing rental income. Cash reserves. Some lenders require 6 to 12 months of mortgage payments in savings to cover any gaps. The key is presenting your deal the right way. And in the next section, I'll break down the exact steps to getting approved, even as a first-time investor. Step-by-step DSCR loan approval process. If you're ready to apply, here's the exact step-by-step process. Find a DSCR-friendly lender. Not all lenders offer DSCR loans, so you'll need to find one that specializes in them. Some lenders focus on experienced investors, while others work with first-time buyers. Get a market rent appraisal. Since DSCR loans are based on the property's income, lenders require an appraiser to determine market rent estimates, even if the property is vacant. Strengthen your loan application. To increase approval chances, make sure you have a strong credit score. Aim for 680 or higher. Prepare a higher down payment. 20 to 25% is ideal. Show bank statements proving you have at least 6 to 12 months of mortgage reserves. Submit your application and wait for approval. Once your paperwork is in, the lender will verify everything and calculate your DSCR ratio. If it's 1.0 or higher, you're in a strong position for approval. DSCR loan approval strategies. Even if you don't meet every requirement, there are ways to boost your approval chances. Use a cosigner or partner. If your DSCR is too low, adding a financially strong co-investor can improve your approval odds. Buy in a high rent area. Higher rent potential equals better DSCR. Reduce expenses. Lowering property taxes, HOA fees, or operating costs helps improve the DSCR ratio. Negotiate loan terms. Some lenders allow interest-only payments for the first few years, making it easier to qualify. If you're struggling with approval, check out the lenders in the description. Some offer flexible DSCR programs that work for investors at all levels. Common DSCR loan mistakes to avoid. Before you apply, avoid these 3 major mistakes that get investors denied. Not checking DSCR requirements. Some lenders require a minimum DSCR of 1.2 or 1.25, so if you assume 1.0 is enough, you could get denied. Ignoring closing costs and fees. DSCR loans have higher closing costs than traditional mortgages. Make sure you budget for them. Applying with a weak loan file. Lenders want clear, strong applications. If your credit score is low, your reserves are weak, or your DSCR is below 1.0, you'll need to fix those first. Avoid these mistakes and your approval chances will skyrocket. Now that you know how to get approved for a DSCR loan, it's time to take action. Find a DSCR-friendly lender. Check the links below for the best options. Make sure you meet the credit, down payment, and reserve requirements. Apply with confidence and secure funding for your investment property. Want more funding strategies? Make sure to like, subscribe, and check out my other videos on real estate investing and business credit. Thanks for watching, and I'll see you in the next one.